Today, we are going to discuss about America's treasury markets. The US treasury market may sound complicated, but think of it very simply. When the US government needs money, it borrows by selling treasury bonds. These bonds are treated as one of the safest investments in the world because they are backed by US government. That is why banks, investors, countries, and companies across the world trust them. They are also used to price many loans, investment, and financial contracts globally. But now this market is under pressure. America's total national debt is now around $39 trillion in 2026. The amount of treasury debt in the market has also grown sharply, reaching about $32 trillion. This means the US government has to keep finding more and more buyers for its bonds. Earlier, foreign central banks were strong buyers, but their demand has not grown enough. So now the market depends more on private investors and hedge funds. Some of them invest using borrowed money. They can make the market risky during the stressful periods. This matters because if the buyer suddenly disappears, the treasury markets can freeze. Something like this happened in March 2020 when the Federal Reserve had to step in and buy bonds to calm the market. There are also other reasons why the demand is weakening. High inflation has made the bond less attractive because investors want high returns. Trade tensions and financial sanctions have also made some foreign countries cautious. For example, Western countries froze around $300 billion of Russia's sovereign assets after the Ukraine war. Iran's frozen funds abroad have been estimated as high as $120 billion. The US also froze around $7 billion of Afghanistan's central bank assets after the Taliban takeover. So, some countries may now think if we keep too much money in dollar assets, can it be frozen during a conflict? That fear can reduce the trust and make some foreign buyers more careful. So, what is the solution? First, the Federal Reserve should be ready to act like a foreign brigade. If the treasury market freezes, it should step in quickly, but the support should be temporary and only used during emergencies. Second, this should not look like a normal money printing. The Fed must clearly explain that it is only keeping the market working, not trying to artificially boost the economy. Third, the treasury market needs better plumbing. Trading data should be reported faster, prices should be more transparent, and investors should be able to trade more directly with each other. Today, many traders go through big dealer banks, but during stress, these banks becomes become bottlenecks. A more direct trading system can make the market stronger, but the biggest fix is not technical; it is political. America must reduce borrowing. Its budget deficit is around 6% of the GDP, which is very high for a normal peacetime economy. When the government borrows more, it has to sell more treasury bonds. If buyers do not keep up, the US may have to pay a higher interest, and the high interest costs make the debt problem even worse. The US is also using more short term debt. This may look cheaper today, but it is risky because the government has to refinance it again and again. America gets a huge benefit because of the world trust treasuries. This saves the US more than $300 billion a year. So the message is simple. Protecting US treasuries means protecting trust in America. And protecting treasury also means protecting the backbone of the global financial system. Thank you.